Can you close that? I'm
not on the camera, right?
No. Hello and good morning. Welcome to our first-time home buyer webinar, or if you're a move-up buyer, move-down buyer, we can also help you too. Remember, this is live and interactive, so if you have any questions, please put your questions, comments, concerns, thoughts about buying a house into the chat box so that we can answer all your questions and get you on the right path of home ownership. So we're going to wait a couple minutes before we really dive in. But for now, let me know that you're out there. Put a chat in there, ask a question. This is for getting people on the right path to buying a house. So if you've purchased a house in the past, it's likely that you've experienced the different things that are involved in doing so, like submitting documentation, filling out applications, pulling credit, that type of stuff, signing contracts, offers, that kind of thing. It's all similar to the same. If you purchased a house prior to 2012, things are different. If you purchase a house after 2012, pretty much the same, very, very close to the same, because a lot of the rules and laws changed since the great crash of 2008, 2009. So today, to buy a house, it's pretty simple, guys. It's very simple. There's only 3 pillars to a loan, okay? And here's the thing. I don't get you approved. You get you approved. How you function in life and how you handle your finances, manage your credit, save your money, earn your income, that's you building your file. So if you're great at paying your bills on time, if you're the type of person who's out there trying to seize every opportunity and make as much money as possible, or have the discipline to store money away, then you're going to buy a house. You're going to be a homeowner. If you're the person who doesn't do those things, who doesn't work hard to try to advance because the man's always holding me down, if you're the person who doesn't try to take opportunities and try to earn more money or save money because you'd rather have a nice watch or a nice bag, and maybe don't pay your bills on time, then you've built a horrible file. So I don't build your file, guys. You do. I just give you the guidance on what you can do to be able to buy a house or not. So the first thing, let's talk about income. So income's easy. If you've had a job or are self-employed for the past 2 years, you qualify in that sector. Okay. You only need a 2-year work history. I don't care if you're working at one company or multiple, that you could combine 2 years together. 2 years work history is 2 years work history. It doesn't even have to be in the same field or occupation. Okay. So they just want to know that you're able to hold it down for 2 years. Because if you can hold it down for 2 years, you can hold it down for 10, 20, 30, 40, depending on how old you are. Okay. So that's the concept behind a 2-year work history. A lot of people want to make changes in their career, which is maybe you're currently working at, let's say, a warehouse, okay, respectable job, but you're going to school to become an engineer. And now you want to take that work history from warehouse to engineer. Can you do that? Yes, you can. You can for 2 reasons. One, you have a 4-year degree that you actually lean into that shows that you have competency in this field, and that counts as work history. And the second one is that when you're advancing, it's good that you're making more money when you're advancing in your career. So if you're making $20,000 and then you change jobs and now you're making 40, and you change jobs and now you're making 60, that's a positive thing. If you're going backwards, that's a problem, guys. So even if it's a 2 steps back to go one step back to go 2 steps forward, that can be a problem when it comes to the income. But if you have questions, comments, concerns, go ahead and put them in the chat box. Hey, Donna's doing it. How you doing? Donna's doing it. Anybody out there, follow her. She's been in all of our lives and chats, and she's a great, great supporter of ours. We love Donna's doing it. So follow her chat, follow her feed, because I think what she's doing out there is great too. Now let's talk about the second pillar of buying a house, guys. Let's talk about credit, the thing that haunts people, the thing that scares people, the thing that people never want to do. Don't pull my credit. Don't do that, because I don't know what you're going to find. I haven't been doing a good job. Well, here's the thing, guys. If you want to buy a house, we have to pull your credit. We have to know where you're at in order to know where you're going, just like Google Maps, okay? So let's just say that you're in Southern California and you want to take a drive to the East Coast, okay? You want to take a drive to Pennsylvania, let's just say. Do you know how to get there? Maybe, but if you don't, what do? You put in your current address, where you're at, and then you put in your destination, where you're going, and then it says go here, 5 miles, go here, make a right, make a left, U-turn, whatever the directions are, but at least you have a clear course to take in order to get to where you're trying to go. Okay. So that's credit in itself. We need credit. We need to know where you're at in order to know where you're going. But let me give you some good news for those of you that are scared to pull your credit because you've heard these myths and rumors about having people pull your credit. It's going to lower your credit score. That's not true unless you abuse it. That's not true unless you abuse it. So if you're the person who goes shopping every weekend and walks into Sephora and to get 20% off, you get a Sephora credit card, or walks into Kohl's and to get 20% off, you get a Kohl's credit card, or Home Depot or Best Buy or whatever the store is, enter in that name, then yes, tons of people are pulling your credit. It shows that you don't have discipline. It shows that you don't have the ability to not exercise that tool that you have, because it is a tool. And if you exercise it too much, you get slapped on the hand. But if you're the person who's had challenges in the past and all of a sudden, not all of a sudden, let's say you had a challenges 5 years ago, okay? Maybe you lost your job. Maybe you're a victim of COVID because a lot of people lost their jobs. A lot of businesses closed down, unfortunately. And you were late on payments, car payments, credit card payments, mortgage payments, motorcycle payments, whatever it is payments. You were late and it reported negatively on your credit. But after a couple of years, you got back on your feet. You got back on your feet, got a new job, maybe a career, making decent cash, got caught up on your bills, and have been making your payment on time for the past few years, but your credit scores are still low. Okay. Because that's the thought for a lot of people is like, I still have bad credit. For that person, you have a chance. Why? Because you have current on-time payments, and that's a big deal. That shows character. That's the character part of credit, okay? Not the discipline part. The character part is when you have the ability, do you pay your bills? And when you don't have the ability, it clearly shows, that you have to let those things get hurt when it's, when it's that during that time. But if you're making your payments on time for the past few years, you have a chance, guys. You have a chance to buy a house. So let's get to the good news. The good news is we do soft credit pulls. We do soft credit pulls, which means that if you do have that thought that pulling your credit could negatively impact you, don't let it even enter your brain, because what we're going to do is pull a soft credit pull, which does not show as an inquiry on your credit, that does not affect your credit score. So regardless, if you're the person who abuses and pulls your credit all the time, or you're the person who doesn't, we can do a soft credit pull, get you on the right path, get all the data, and let you know what you need to work on if you need any help, or tell you that you're qualified to go shopping if you are, okay? So that's the good news there. Let's talk about the third leg to the loan, and that's assets. So we talked about income, we talked about credit. Let's talk about assets now. Donna, it would be cool if you brought a current client on as a guest to talk about their experience with you. You know what, Donna? Let me talk to someone. Let me see if I can find someone, and maybe we'll get them on. Where this platform that we're doing it on, guys, it's new to us. So we're going to try to figure out how to bring guests on, how to add other people. We do have a way of doing it. It's just going to take a little bit of time because we'll have to build it out through the software and all that stuff. But yes, great thought. I think that's a great thing to do. Kind of like a little talk show. Tell us about your experience, especially someone that might have had some challenges, right? I think that's probably best because they can actually testify and say, hey, I've had a hard time, bad on credit, whatever the case may be. And we gave them guidance, we gave them help, we taught them how to do things, and months later they were able to buy a house. Gabby, good morning, all. Donna, nice to meet you. I'm Gabrielle. All right, we got people interacting in the community. I love it. When it comes to buying a house, guys, it's much easier than people think. Much easier than people think. If you've done the things okay, if earning money, paying your bills on time, saving some cash, if you've done things okay, more than likely you can buy a house. Okay. So what I mean by okay is a lot of people want to think that having a 800 credit score is necessary, or a 760 plus, or whatever their thought is in their brain is necessary. But if you have a 620, that's okay credit. If you have a 640 score, that's okay credit. If you have a 660, that's okay. That okay range gets houses every single day. Every single day they get houses, guys, because you don't need perfect credit. You don't need a perfect scenario. You don't need all of that in order to buy a house. What you do need is a good mixture of stuff, which means 660 credit score, get a house all day long. 620, buy a house all day long. Okay. Can you go lower than that? And the answer is yes, you can. But the question is, have you been paying your bills on time? That's where that paying your bills on time is a big deal. Because here's a new guideline. I'm kind of jumping all over the place. I'm going to get back to assets here in a second. But Fannie Mae, who is the largest buyer of loans, the largest investor that's out there when it comes to buying houses. FYI, Gabby's an agent, guys. She's one of the rock star agents here in Southern California. So if you guys need to talk to someone, talk to a real estate agent, because I do the loans, I'd highly recommend her in Southern California, and she can probably get you some recommendations out of area too if you guys are looking to buy a house. But I digress. Fannie Mae, largest investor in buying loans in the nation, okay, has adjusted their guidelines, which means that it used to be 620. If you had a minimum of 620 or better credit score, you were able to buy a house. But now that new guideline does not exist. So it does not have a minimum credit score, guys. So if you're that person I was talking about a minute ago, where I said you had challenges during COVID, a couple of years of hard times. Since then, everything's been better. For years, you've been paying your bills on time, but your credit score is still low. That's who it applies to, guys. It applies to you. So if you're that person, there is a route for you to get a house. That's why I'm confident that as long as you've been paying your bills on time, there's an opportunity for you guys to get a house, an opportunity for you to become a homeowner, an opportunity for you to get approved for a home loan. Okay. Let's go back to our assets, though. Let's go to assets. So what are assets? Assets are something that's worth something. That's assets. Okay. For in the terms of buying a house, it's what do you have in your bank? What do you have in your checking? What do you have in your savings? Do you have any CDs? Do you have any stocks, bonds, IRAs? Do you manage a brokerage account? Do you have gold, silver, anything that you can turn into cash, basically, or that it is already cash? That's an asset. Now, why are assets important? Assets are important because even if you're using a program like down payment assistance, and you're not coming in with the down payment, and you don't have to have those funds for a down payment, there's something called reserves, which is money that is set aside for emergencies. So let's just say that you're using a down payment assistance program. Your down payment, let's say $15,000. The program's paying for the whole down payment, but you have $5,000 set aside in a checking account that you're not using. That $5,000 gives your file strength. You're not using it, but it gives it strength because it tells the algorithm that, hey, this person has 15 grand to cover the down payment. Ooh, somebody's calling me. This person has 15 grand to put down the down payment. But in addition to that, there's $5,000 just sitting there that they're not even using to buy the house. And who on earth saves $5,000 in today's economy, right? Like you got to be making a lot of money or have saving a long time in order to have $5,000 in your account. Who the hell does that? So the algorithm gives this file more strength. There's more strength to this file, which your likelihood to get approved goes way higher. Okay. So that's assets, guys. And then when it comes to the down payment, because there are a lot of different programs out there. So the specialty programs, let's just kind of categorize those. The specialty programs, down payment assistance, help with closing costs, first-time home buyer. Let's go to the specialty programs. Let's say loans for teachers, loans for policemen, loans for firemen, loans for physicians, loans for city workers, loans for state workers, loans for whatever, put whatever name on that you want. Every single one of those comes with a catch, guys. There's no free lunch when it comes to a specialty program. More than likely, it's going to have a higher interest rate. On all the programs that have ever crossed my desk where someone was getting something special, it had a higher interest rate. And that's the least of it. Sometimes you have to pay the money back. Sometimes you have to pay it back plus interest. Sometimes you have shared appreciation, which means as your home goes up in value. So let's just say that you bought the house for $500,000. Now it's worth $800,000. That difference is appreciation or equity. And sometimes that's shared with the bank. Ooh, okay. So if you were to sell the house, you got to give them a portion of the money that you made, plus the money that you borrowed from them to buy the house. You have to pay that back plus interest. So every one of these programs comes with a catch. Now, if it's the difference between you owning a house and not owning a house, okay, different story. I recommend using the programs. But if you're the person who has all the cash and does qualify for these programs, I recommend using your cash for the down payment and or closing costs if necessary, because you're going to get a better overall loan package. Okay, better overall loan package. My recommendation, I always tell my clients, you're the boss. Here's the data. Boom, boom, boom on the specialty program. Boom, 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 boom on the program traditional financing. Which one works better for you and your family? I recommend this one for these reasons. I don't recommend this one for these reasons. That's just a recommendation or an explanation. That being said, you're the boss. You choose what's best for you and your family. And I would say probably 10% of people go the other route because it makes more sense. And I get it. They have their own ideas and own thoughts about their finances, and I'm okay with that. I have no problem with that. Okay. But any questions, comments, concerns about buying houses, guys? I want to answer questions. I want to get people on the right path. I don't want to just be a talking head, saying, talking about loans and stuff. But if not, I'll keep going. So when it comes to buying houses, guys, here's the process. Get pre-qualified, okay? If you're thinking about buying a house like right now, you need to get qualified like right now, and you need to be fully underwritten to make sure that a underwriter goes through your file and gives it a stamp of approval. Because if not, what's going to happen more times than I can remember is someone that's standing in front of the home of their dreams, literally standing in front of the home of their dreams, and they're like, this is the one. I have to have it. If I don't get this one, it's going to break my heart. But because they didn't do their due diligence ahead of time, there might have been a credit issue and they can't get that house. They maybe don't make enough money and they can't get that house. Now they got to scramble for a cosigner or figure out a way to get there, which we'll help you with. We'll give you the options of how to get there. And maybe you can make it happen now, but maybe it's going to take you months and you're not going to get that house. So what I always recommend is if you're trying to buy a house now, call me like today. And if you're trying to get a house within the next year, get pre-qualified. Get pre-qualified. If you are serious about becoming a homeowner, and I ask everyone this question on a scale of 1 to 10 of you becoming a homeowner, how important is it to you? 1 being the lowest, 10 being the highest. And everyone that gives me a 7, 8, 9, or 10, anything 7 or above, get pre-qualified. 6 or below, don't worry about it. Keep kicking the tires. Just think about it. That's fine. But 7 or above, get pre-qualified. What we're going to do is we're going to ask you a series of questions about yourself. Where do you live? How long you live there? Where do you work? How long you work there? How much do you make? How do you earn your money? Are you hourly? Do you get overtime? Do you get bonuses? Do you get commission? You're self-employed. Okay. Are you 1099 self-employed? Are you cash? How long you been self-employed? What's the job? How long have you been doing this? So a series of questions, and then ask you for certain documentation based on our conversation. So I was like, okay, now that I gathered the idea of your life, send me this document, and this document. Simple stuff, though. It's really simple. It's usually just basic W-2s or your taxes and your most recent paycheck stubs. If you get paycheck stubs, IDs, Social Security card, easy stuff. It's usually really easy stuff. Okay. Now, getting pre-qualified, like I said, we'll do a soft pull. So it doesn't interfere with your credit. It doesn't give you an inquiry on your credit report. It's like nothing ever happened. And we'll be able to tell you exactly where you stand. So if you do qualify to buy a house, we'll let you know exactly what you qualify for. We'll let you know exactly the amount, what the mortgage payment's going to be, what the potential taxes and insurance costs are, everything. How much you need to pay out of pocket, what programs you qualify for or don't qualify for, what you can do. When you're placing offers, that type of stuff. That's the real estate agent's side of it. But the loan officer, I'll cover all the financing side, all the questions, comments, concerns. Make sure you feel comfortable all the way through, because that's the name of the game. If you don't feel comfortable, then we're going to have to rehash something until you fully understand. Okay. Now, if you're not qualified, okay, which is a large group of people, let's be honest, challenges and hard times exist. And so do people who don't take life serious. They exist too. And those people that don't take life serious, that pay their bills not on time because they're lazy or because they've overextended themselves, which is very, very popular right now for some. So I'm not bagging on those who have overextended themselves because of circumstance. I get that. But a lot of people overextend themselves because they are more worried about what other people think of them. Okay. They're more worried about their handbag. They're more worried about their watch. They're more worried about their car than paying their bills on time. And that's the group of people that I'm referring to. Now, I'm not bagging on you. I'm not telling you anything that you don't already know also. Okay. So when you come to me, and I tell you that you got a lot to work on, you know why. You know why. Okay. So both sets know why. Those that are overextending themselves because they want to, and both the other side that is overextending themselves because they need to, they know why they need to do some work on their file because of the challenges that they've built for themselves. What will happen is we're going to put your file together. We're going to identify these challenges. We're going to let you know everything that you need to do and work on in order to get you into a home. Now, let me give you probably a worst case scenario. Outside of foreclosure, outside of short sales. So if you've had foreclosures or short sales, or maybe deed in lieu of, which I don't need to cover unless you know what that is. If you know what that is, you know what it is. Those have exact seasoning timelines. Okay. Outside of foreclosures, deed in lieu of, short sales, bankruptcy, those have timelines that already exist that we can just share with you. As long as you have your dates when those timelines start, I can let you know the soonest you can buy a house. Outside of that, okay, let's say you have a poor credit situation. Okay, I'll give you exact scenario. Someone came to me a few years ago with a 430 credit score, 430. I think the lowest that credit goes is 350. The highest that it goes is 850. So this guy was 100 above the lowest. Okay. 850 is still a mile away. So came to me with the 430 credit score and wanted to buy a house. So I said, okay, very ambitious of you, very ambitious. You clearly know you have a history. You clearly know the past. You've dealt with some challenges, but I can see that, within the last few years, you've been doing everything right, still have a low score. We need to work on that though. Okay. And this is before that Fannie Mae change of the guideline of 620 credit score minimum. And we send them to credit repair. Okay. What is credit repair? Credit repair is a third-party company, not us. Okay. Not us. It's a third-party company that actually specializes in repairing your credit, taking the things that are keeping you down off. So here's how I look at credit. Let's say, think of it as like a pickup truck. Okay. So you start out fresh. You got, your first piece of debt, credit card, auto payment, whatever it may be. We're paying it on time. So now you have a high credit score, or high, the bed of your truck is high, but then you had a late payment, boom, another late payment, boom, another late payment, boom. Okay. Maybe you had a foreclosure, boom, bankruptcy, boom. Maybe you had a repossession, boom. Maybe you're in collections, boom. Maybe, all these things you keep adding up, but you're lowering your score or lowering the bed of the truck, which is like every time there's a derogatory, it's like throwing a big boulder on the bed of that truck. Now, what does credit repair do? They focus on taking off those derogatories of the bed of the truck. So boulder 1 rises a little bit, your score rises. Boulder 2, score rises. Boulder 3, score rises. Boulder 4, score rises. So as you're operating your credit poorly, you're adding weight to your credit. As you do credit repair, it's removing that weight. That's how I explain it. So this person, 430 credit score, in about 6 months, okay, 6 months, this person went from a 430 to a 660 credit score. I think it was 663 in 6 months. 6 months. Now, this person had been living with this poor credit for like 10 or 12 years. Something happened. Oh, crash in 2008. That's what it was. So this person was a part of that, hit hard times and started paying bills on late, not on time, going into collections, all this stuff. And over time, they were able to fix their credit. 6 months, guys. So let's talk about 2008. So 2008 to 2023 was 15 years. So this person's been dealing with bad credit for 15 years. We sent him down the path of credit repair, and in 6 months, guys, 6 months. So living with poor, crappy credit for 6 months, 15 years, got it from a 430 to a 660 in 6 months. That's incredible. Now, here's why it happened that way, is because when you do this process, there's certain things that you get in the mail from the credit bureaus, and you have to get that data to the credit repair person that you're working with, because they're going to send you all the information. They're going to do the work, but all the information is still going to come back to you. So you have to be in good communication with your credit repair person. Now, if you're in good communication, you can be just like this guy, 430 to a 660 in 6 months, and then became a homeowner. Which is the most important, biggest part of the story. Okay. So fixed his credit, became a homeowner, 6 months, 6 months, 15 years worth of BS, 6 months, went from zero to hero, becoming a homeowner. Started building for his family, started becoming more secure, give him a backyard, give his wife a kitchen, give his son a backyard. Said that again. Anyway, my point in saying this is if you are a person that's qualified, we'll go over everything with you, let you know how it works, make sure you're in the right program that makes the most sense for you and your family. And if you're a person who is not qualified today, we're going to help you. We're going to get you to qualified. So whether you're qualified today or tomorrow, stick with us. We'll make sure you get into a home. Now, here's the second piece, guys. Once you're fully qualified, you start with us. People always ask, where do I start? Where do I start? On social media, we have a huge presence, tons of questions. And one of the most reoccurring question is, where do I start? And it is with us. Start with the loan officer. If it's not us, start with the loan officer. Okay. Start with a home mortgage loan officer. They're all over the place. I was walking in Rancho Cucamonga the other day and just office after office of loan guys. So it's very hard to choose a loan guy. And a lot of people ask me that question too. They're like, there's so many of you guys. How do I choose one? It's kind of like doctors. Doctors all over the place too. Everywhere you go, there's a medical building, right? Here's what I say. If there's a person who's putting it out there and not afraid to answer questions live on YouTube, TikTok, Instagram, Facebook, that guy probably knows what he's talking about. But I digress. Let's get back to it. So if you're qualified, we send you shopping. If you're not qualified, we'll teach you. We'll get you over the hump. We'll let you know what it's going to take to get you qualified. Then you go shopping. Then we introduce you to an agent. Okay. If you already have an agent, awesome. Okay. Just make sure that your agent has a track record. Okay. Has a track record. Just pretend that you're getting surgery and you're hiring a surgeon. Okay. You know what you need to do to make sure that that surgeon's good. You need to check their track record, see their successes, see their losses. Okay. Now it's harder to get that data on an agent. It's harder to get that data on a loan officer too. But you'll know by their history. You'll know by their success. You'll know. How many houses have you closed this past month? Ask them that question. How many houses have you closed this past year? How many houses have you closed in your career? What was the biggest challenge you had to overcome? That's what you do when you interview with a real estate agent. Remember, you're the boss, guys. You're the boss. So if you're hiring someone, what questions do you ask that person? Same thing to me. What's your track record? How many have you closed this past month? How much have you closed in your past year? How much have you closed in your lifetime? What's been your biggest challenge? Have you ever not closed a transaction? Why didn't you close a transaction? Or give me one that was a problem that became a success. Millions of ways to chop this up, guys. But here's the deal. If you don't know one and you don't want to go through that process, I will introduce you to a rock star agent. We have one right here in our feed, Gabrielle. So guys, if you're looking for a rock star agent, go ahead and send her a message. DM her, or I don't know, whatever that app takes you, get a hold of her. Put your phone number in there, Gabby. Put your phone number in there so people can reach out to you if they want a real estate agent. And then I'll put my phone number if they're looking for a loan officer. So start with a loan officer. We'll introduce you to a rock star real estate agent. We'll get you guys on the right path. We'll make sure that everything that you're doing is right when it comes to buying a house. And know this, guys, we are okay with talking to everyone. Everyone has a story. Hold on, I'm getting thirsty. Everyone has a story. Everyone has a past. Do not be embarrassed. I've heard it all. Just like the lady doctor, okay? It's very, very, I understand how it would feel going to a lady doctor, but they've seen it all. They know everything. There's not anything you can share with them that's going to shake them. Same thing here, guys. I had a young lady call me off of social media, and she was actually not that young. She's a little older than me. She's like 50. And she had a story. She's like, I'm a little embarrassed about this, but here it is. And after it, I said, don't be embarrassed about any of it. I've heard it all. I've seen it all when it comes to this process. So what you're going through, many people have gone through, and I have a solution for you. And we sent her down the right path, and now she's shopping. So that's the good news for her. But anyway, guys, if you're interested in getting a home loan, my phone number is there. Call us. Reach out to us through social media. We want to get you on the right path. If you're interested in meeting an agent, we have Gabby here. Reach out to Gabby. She'll be able to take care of you and walk you through the process of what it's going to take to either buy or sell your house, guys. So that's the good news there. Anyway, that's it for this week. My name is Chris Dominguez, one half of Chris and Lee. My phone number is there. Give me a call, Follow us on all social media. It's Chris and Lee Mortgage, and we hope to help you buy your next house in the near future. You guys have a great night or a great weekend. It's Saturday. Yay.